Good afternoon, everyone. Thank you all for being here with us today. I just want to take a minute and thank the Family Law Executive Committee for giving us this opportunity. Cheryl, Alyssa, Withum, if you're on the line, we really appreciate it. While we're disappointed we couldn't be at Seasons 52, having dinner and a drink with all of you, I guess this will have to do during the current times. So today, Nicole, Lyons, and myself are going to be walking through the various different types of tax returns in order to give you a better understanding of how to navigate and give you some key items to look for. All of the documents that we're referencing in the presentation are included in the handout section. So everybody should be able to follow along at home. You should have the materials. On the right-hand side of your computer, you should have a control panel, and there's a handout section. So if you go there, you should be able to access all of the documents we're going through. We'll also share our screens pretty frequently today so that you can see what we're referencing throughout the presentation. Just a couple of housekeeping items I'd like to mention. If you have any questions at all, feel free. We're trying to make this as interactive as possible. Also in your control panel, you should see either a chat or a questions area. Feel free to type in questions as we're going. We'll do our best to try and answer them as we go. If we run out of time, we can certainly do questions through email as well. We are also providing CLE for the presentation. So in order to get credit for that, please just download the appropriate evaluation form, which is also in the handout section. And partway through the presentation today, we're going to be giving everybody a code that you need to include with that. So listen up for that code. Okay, so I'm going to kick us off by going through the 2018 individual income tax return, which is Form 1040. This document is really a starting place for you to start to be able to identify income sources and assets, including any business interests that an individual may have. So I do want to point out that just by reviewing the tax return, it's not sufficient to complete a cash flow analysis. A lot of times business owners will receive non-taxable compensation. So this is obviously just taxable income here.
I just want to, Judy, 1 second before you start sharing your screen with the
Sure.
1040. There's 2 PDFs in the handout section. You'll see the number 4. So if you click on the triangle, you'll see the 2 CLE evaluation forms. There is a PDF that contains a PowerPoint presentation, and then there's another PDF that's going to contain the 4. I'm sorry, I have a phone call. This is what happens. The 4 forms that we're going to be walking through with you today. We are not going to go through the PowerPoint. We think it's more effective to go through the forms themselves. And as you'll see, once Judy kicks everything off, she's going to go through highlighted sections of each of these forms. So we're going to walk you through them instead of speaking to you without the tangible forms in front of you. So if at any point you want to refer to that PDF PowerPoint, you can, but everything that we're going to be doing today is going to be in the last of the PDFs. It's the last one on your list. It's the one navigating, and I'm sure you were about to say that, the tax form PDF. So if you want to open that, Judy's going to kick it off with the 1040, and then we're parsing the presentation that way. So I just wanted to add that caveat in case people didn't know exactly. We want them to follow along, but the presentation is there just for their benefit, for resources later.
Okay, perfect. Thanks, Nicole. Okay, so if everybody has that information, I am going to share my screen now. You should be able to see, we're going to go to page 1 of those handouts, and that's where you'll find the 2018 1040. So I think most of you are probably aware in December of 2017, the Tax Cut and Jobs Act was passed into place, and it became effective January 1st, 2018. So with that, it was the largest tax overhaul that we've seen in decades. And with that came new tax forms. So for practitioners like Nicole and myself, who were used to looking at those old forms that had been around for decades, it's taken a little bit of getting used to. So we wanted to show you these new forms. So I'm hoping everybody can see my screen now. I'm here at the top of page 1 of the 1040. So what I really like to tell people is pages 1 and 2 of the tax return are really summary pages. All of the other schedules, statements, they're all just support for the numbers outlined on these 2 pages. So if you have a client who brings you a tax return that's maybe 300 plus pages, and you're feeling a little overwhelmed, don't get discouraged. You use these 2 pages as your roadmap, and then we're going to guide you through today on what really key pieces of information you can pull from those. So I'm going to move over to page 2. And you can see here, line 1 at the top of page 2 is titled wages, salaries, tips, etc. What this represents is box 1, the federal taxable wages reported on your W-2. So all of you most likely receive a W-2 from your law firm. You're familiar with this document. It's going to be what's in box 1 that goes here. Couple of things I want to point out. If you have any 401k deferrals or any contributions made to any other qualified savings plans, that number is not going to be included here. So what you want to do is look at the W-2 box 5, which is the Medicare wages, to really get an understanding of the compensation. So by looking at line 1, I think it could be a little misleading. So I just want to point that out. Okay, moving on here to lines 2 and 3, it's your interest and dividends. So this includes, you have tax exempt interest, taxable interest. So what this is interest that's generated from bank accounts, brokerage accounts, loans receivable, interest from any pass-through entities and trusts. And Nicole's going to get into that a little bit later in our presentation. And same with dividends, you'll have qualified dividends here and ordinary dividends. The difference between them is that ordinary dividends are taxed at ordinary income rates and the qualified dividends are taxed at a lower capital gains rate. So if an individual has more than $1,500 in interest, they're required to attach Schedule B. So I'm going to go through here to page 4 of your handout. So here you'll see Schedule B, which is titled Interest and Ordinary Dividends. And at the top section here, we have the interest. So what this lists is all of the interest with the institution name and the amount. And at the bottom here, you can see the ordinary dividends with the amount. I think this is a great starting place. If you are working for the non-moneyed spouse and they come to you and they don't have any idea as to what accounts they may have, this is a really good indication. If there's any interest-bearing accounts, they're going to be reported on Schedule B, so at least you'll have some information as to what documents to ask for. Also, something to look for in the interest income is the amount. So if there's something here with a significant balance, it most likely means that there's a pretty significant account available for ED purposes. So Schedule B is a really good resource for you. And these numbers here, so if you see the $120 here in interest income, and we go back here to page 2, here's the 120 here. So Schedule B is really your guide for those 2 items. Moving down a little bit here to line 9, you'll see this is qualified business income deduction. This is often referred to as the QBI. So this was one of the biggest overhauls with the new tax law. It's new to the 2018-1040. This is a extremely complex deduction. It would require a seminar, I think, in and of itself. Our firm has an entire department dedicated just to understanding the complexities of this. So I don't want to get into any of the specifics. I think Nicole may touch on it a bit later in the presentation, but just we wanted I wanted to point this out today. It's a topic you should be aware of, but we're certainly not going to get into any of the details here.
Judy, I just want to, if you can go back to your Schedule B with the interest and dividends.
Okay.
You had mentioned obviously that some of the flow-through income, interest and dividends from K1s may be picked up and reported here. They would be separately stated. Right now, this is an example, very simplistic, right. ABC and XYZ company. Right. And any flow-through income from any trust would be here, and any other entities, and they would be separately stated. So you would see Schedule K1 dash company right. separately stated there. So I just wanted to clarify that little point.
Okay, thank you. And also, I think what I forgot to mention is if there's any interest that's tax exempt, that's going to be down here on line 3. So it's blank, but that's going to be where that is reported. Okay. All right. So moving down a little bit, I'm going to go down here to line 20 where the refund amount is. So I just wanted to point out the refund amount because for a couple of different reasons. Number one, this is where you determine if the parties were due a refund or if they had a significant tax liability. Oftentimes, I think the refund amount is important because it could be a potential asset for ED purposes. So we've had a couple of cases where, you know, one of the spouses maybe didn't know the refund amount or know where that went. So that information is outlined right here. If they do apply the refund to the subsequent tax year, meaning they never actually received the refund, that will be reported here on line 21. And then if there was a tax liability, it's going to be outlined right here on line 22. So those first 2 pages are really the summary pages, okay? Now I'm going to get into, if we turn our page to page 3, this is Schedule 1. So Schedule 1 is also new with the 2018 1040, and I'm going to touch on some of the more common areas here. So if we go to line number 12, says business income or loss, attached Schedule C or CZ. So this represents net income from a sole proprietorship. So if you have a client that runs a business and is the sole owner, this is where the net income is going to be reported. So I'm going to move on to page 5 here. And you can see here, this is titled Schedule C, profit or loss from the business. So the top section here gives us some basic information, the name, you'd be able to determine if it was relating to husband or wife. The business name is listed here. Over here in box B, this is the industry code. So if you don't have any knowledge on what type of business it is, or you can't tell from the name, this is the industry code here, which they're required to put on there. And then line F here, the accounting method. So there's 2 different types of accounting methods. They're required to report which type they're utilizing, cash basis or accrual. The difference here is cash revenue and expenses are recorded when they're paid. On the accrual basis of accounting, revenue is recorded when it's, I lost my train of thought.
No, that's okay. Revenue is recorded when it's earned.
Right.
Not when received. Yeah.
And expenses when they're incurred. So that will be, that's the difference there. So moving down, if you see on part 1, the income section, that outlines all of the gross income from the company. And down here in section 2 are all of the related expenses. There are a few that I would like to point out. So if you go to line 13 here, depreciation expense, most of you are probably familiar, but this is a non-cash item. So if you're looking at the Schedule C, trying to come up with some sort of cash flow for the business owner, you will want to consider if there's any depreciation expense, which is a non-cash item. Also, if you go over here to line 24A and B, these are certain areas where a lot of times perks for business owners are recorded. So for example, if there's any personal travel or meals or entertainment, you want to take a look at these certain expense items and get a handle on those. Those are questions to ask your client or the business owner. So I just want to point out those key areas. So then
Judy,
your net income here, if we drop down.
I just want to go back to that part 2. I'm going to be interjecting, and I think it helps.
Yeah,
Judy's going to do the same thing with me as well. Going back to the depreciation in section 179 deduction. Section 179 is an Internal Revenue Code line item. It's in the code itself, and sometimes, majority of times, depreciation is a non-cash expense, but there are many other times that the business owner can fully depreciate certain purchases of assets, and with that full depreciation, they may expense the entire cost or the majority of the cost of that particular asset. Sometimes vehicles, for example, business owners might buy vehicles, and they may they may put it in as a Section 179 deduction where they have beneficial tax treatment to accelerating that and putting the whole cost of that asset as a deduction. So something to look towards, especially again, we're doing this to highlight certain areas of the return. So when you get it from your clients, you know, certain areas and aspects that'll give you a nice background and picture in terms of maybe asking those further questions or doing or propounding some, you know, notice to produce or things of that nature, other items to look for. But certainly when we're going through this Schedule C, this is our initial look at the business if it is a sole proprietor, single member LLC. So this is just one step, right? I mean, then we'll go and we'll get all the detailed information, the detailed general ledgers or banking information, which will assist us in determining whether that depreciation line item, for example, is just a journal entry and just non-cash, or if it's actually a cash transaction. So I just wanted to clarify that. And again, we're not going through all the line items here. There's little boxes. We may touch on other line items, but we just wanted you to focus in on the most important aspects of each of these forms as we're going through them.
Right. Okay, thanks, Nicole, for that. All right, so moving on, if we go to the bottom here, the net profit or loss is outlined here on line 31. So I'm going to go back to Schedule 1, which is on page 3, and you'll see your business income is the $35. So that matches right there. Moving down to the capital gain or loss. So this relates to investment activity on the sale of an asset. All of the details are outlined on Schedule D. So let's turn now to page 7 of the materials and Schedule D titled Capital Gains and Losses. So what you see here is the top is titled Short-Term Capital Gains and Losses. Those are typically assets or investments that were held for less than 1 year. Down towards the bottom in this part 2 is going to be long-term capital gains and losses. Those were investments or assets that were held for more than 1 year. I just want to point out that box 6, if you look at box 6 and box 14 down here, it relates to the capital loss carryover. So you can carry forward losses indefinitely. This is something to keep an eye out for. It may represent an asset available for ED purposes. So if there's a significant future tax benefit available to the individuals, it's certainly something that you will want to consider. So the combination of these two is right here where I'm highlighting. It's the negative, it's a loss of $1,630. So if we go back up to Schedule 1 on line 13, that's where this flows through here. There are some loss limitations. It's $1,500 for married filing separately, $3,000 for married filing joint. So the losses, as I said, are limited and you can carry forward indefinitely. Okay. Nicole, did you want to add anything else there?
No, you got it.
Okay. All right, so moving down here to line 17, rental real estate, royalties, partnerships, and S Corp. So let's turn, so this is, you have to attach Schedule E to get the information here. So let's move to, I think it's page 13 in the materials, Schedule E, supplemental income and loss. So this schedule is going to report income from rental properties that are owned individually, as well as any pass-through income from entities the individual has an ownership interest in. So it's a really good place to, if you don't have any knowledge as to what ownership interests in any various businesses that parties may have, this is a good schedule to look at. So part 1 up here, this is going to be all properties that that are owned individually. So here, if you look at lines 1A, we have 1, 2, 3 Street Drive. So these would list out the various properties.
We're super creative.
Right, we're accountants. And if you go down here on line 3, so any rental income that's generated from these properties is going to be outlined here on line 3. It's going to correspond with these A, B, and C here. It'll also give you the type of property, whether it's a single family, a multi-family, etc. And a couple of expense items, again, we're not going to walk through each and every one that I do want to point out. Mortgage interest paid to banks. So this would give you the ability to determine if there's any debt on the property. This is only mortgage interest paid. So if you're trying to calculate cash flow, you would really need to know the principal payments on the mortgage, but we've highlighted that just so you're aware of that area. The combination of the revenues, obviously minus the expenses, gives the income from the properties, and it'll give you this cumulative amount here. Moving on to page 14. So this, I think, is an important schedule to look at. So this is going to give you the outline if an individual has an ownership in any type of business other than a C corporation, they're going to get a Schedule K1 at the end of the year. And all of that information is going to be entered here. So you would be able to determine if they had a business interest in a pass-through entity. It's all going to be recorded here. So P is for partnership, S is for S corporation. Nicole's going to get into that in a little bit further detail. I do want to mention also that the K1, by looking at just this information, it's not going to give you the cash flow that the business owner is getting from that entity. You'd have to look at the K1 and look at distributions and other items on the K1, but it certainly will allow you to ask those types of questions and whatnot. So if we move down here to part 3, this is all of the income or loss from estates and trusts. So if they are a beneficiary of a trust and they receive income from that trust, the trust also issues a K1 at year end, and that information is reported in this section here. Okay, so the combination of everything from Schedule E is outlined down here. It's the $2,600. So if we go all the way back to Schedule 1, the $2,600 flows right here. So all of that information that you need is outlined on Schedule E right there. So I kind of we went through a little, kind of quickly. I think we've highlighted the real important areas. Nicole, do you think we have any other areas to hit here?
No, I mean, I'm going to be addressing the partnership that forms and the S Corp forms. I know you're then going to tackle the corporation forms, but no, everything is pretty
complete. So I think that's basically an overview. I think it's helpful in cases where you're maybe working for the non-moneyed spouse in helping to identify, potential bank accounts, potential business interests. Just having an understanding of those various schedules, I think, will help you out. So if anybody has any questions, I think now would be a good time. If you want to type anything into that question section in your control panel, we can probably answer a few questions for you. And if not, I think we are going to be doing a polling question just to make sure you're all paying attention.
So what schedule are income and expenses from a sole proprietorship reported? Schedule B, Schedule C, Schedule D, or Schedule F?
So as you guys are answering the question, Matt Basillo just got on the air. I know we were audio about 5 minutes before the presentation started. So Judy and I were having some issues. Matt Basillo, we didn't introduce him. He's behind the scenes here. He's our marketing coordinator at Withum for the Forensic Evaluation Group. So he's the kind of the controls behind this operation for right now. So that's who's speaking. Matt, how do we know when the poll is completed? Can't select an option.
We have about 60% of people voting right now, but it's been a minute, so we can close it out now if you'd like.
So somebody just put in there that they can't select an option. So can you walk them through how to select the option?
So hopefully right now you are able to see kind of blue screen right now that has the question and some options. You should ideally be able to select one of those three, but if you cannot, feel free to just put in the chat feature what your selection is, and that's fine as well. That will count towards this as well. But we can close it down now if you'd like. Just
Okay.
we picked up 70% of people here.
Yep.
Okay, so let me just close that. And I'll share our results. So as you can see, about 83% of people selected Schedule C, which was the correct answer.
Very good, Judy. People are listening. Yay.
Good job, guys.
That's good. That's good. Schedule D is where the capital gains are reported. And Schedule F is, I believe it's still farm income, right? Schedule F, Judy, I think. I don't think that's in the attachments.
Yeah,
I'm
and it's
positive.
not very common, right? It's not a very
Yeah.
common schedule.
Right.
And we did have a few other people who put in the chat feature as Schedule C as well. So it's probably closer to probably 85 to 90%. So
Nice job.
thank you
All
very
right.
much.
I'm going to change me, right, to the presenter. And Judy, if you can just let me know that you could see my screen.
Yeah, are you on the 1040?
Yeah.
Yeah, we can
This
see you.
is what you went through. Okay, so my schedule, we merged all of these together. So, okay, I'm going to walk through S Corp Form 1120S. I'm also going to talk about the Form 1065, which is used for partnerships and limited liability companies, not single member LLCs, because those are being reported on the Schedule C that Judy just walked through with you guys, but limited liabilities with more than one member. But for right now, S Corp. So I'm just gonna minimize this view. Okay. So I'm at page 15 of 35 of the PDF that you guys have in front of you, and just giving you an overview of the form itself. Just at the top portion here, you get a lot of information about the company. So right now you have obviously the time period listed on the top for the calendar year or tax year beginning whatever day and whatever day. This Part E here, date incorporated, gives you obviously the date that the entity was incorporated with the state. On the left side here, S election effective date. So this is the date upon which this entity elected S corporation status, which is again subchapter S, Internal Revenue Code, for obviously different treatment for tax purposes. And S corporation, just for edification, and it's in the slides, but it is a single level of tax, right? So the income or losses that are reported on an S Corp flow through on the personal 1040 that Judy just went through. It's on Schedule E. So you'll see a one line item on Schedule E for the income or loss associated with this S corporation. So again, single level of tax. Judy is going to walk through corporations later, which have a double taxation. But there's obviously a tax benefit here. So many times C Corps are converted into S Corps. And this section here, Part A, is going to tell you when they made that election. A little bit other insight about an S corporation with this entity. The owners of the entity, shareholders, the owners will receive Schedule K1 forms that will indicate their pro rata share of income or losses that will flow through to them on their personal income tax return, their Form 1040. I'm going to walk through that after I get through the S Corp the actual form itself. I'm going to walk through the K1 again, showing you certain nuances with the form that'll assist you in kind of highlighting cash flow areas, giving you an identity and an indication of ownership interests, et cetera, and certain nuances with respect to the form. Not too technical, but enough to give you'll be able to look at a K1 and identify the main issues there. S Corps have one one class of stock. So sometimes when if you're looking at an actual financial statement for an entity with a corporation, you're going to see two types of stock. And I'm sure many of you are aware of, common stock and preferred stock. S corps, the unique thing about them is that they only have one class. And also, in order to be an S corporation, you're limited in the number of owners, of shareholders. So S corps, in order for you to qualify for S corporation status, you have to have under 100 shareholders. So certain caveats with that. And I'm just trying to look at my notes here. There's other criteria that go into being, qualifying for an S corp with the number of shareholders, single class of stock, but you also have to be a domestic domestic corporation as well. So just some nuances with respect to that. And the owners of the S corp can't be partnerships or corporations. They can only be individuals, certain trusts, and estates. So again, a caveat with S corp. All right, moving on to the form G. So again, highlighting main areas that could be and flag, not issues, but questions that you may have and follow-up questions, certainly questions that we have as a forensic. Going back, G year is a corporation election to be an S corp beginning with this tax year. So the important part of this is that, let's just say this particular year, in 2018, the box is clicked yes. What that'll tell you is that formerly it was a corporation. And because of that conversion, there's certain tax nuances with respect to that conversion, and certain other follow-up questions or certain issues that you want to address or you want to have the forensic accountant address. Mainly, is there any undistributed profits on the C corporation level? Because if there are, obviously that has a tax implication for or not under the S corp. And then also the other thing that'll indicate a possible tax triggering event is that did the C corporation at any point in time hold real property? Because then you get into an issue with built-in gains, taxes associated with that, and the potential tax from any sale that happens now that it's an S corporation. So again, something to flag. I normally don't see it being enacted in probably the past 5 years. I don't. It's normally prior date of that. You'll probably see the S election date, but something to flag. The next H, check if it's a final return, name change, address change. All of this gives you an indication of the status of the entity itself, right? So if you're issuing, especially if you're trying to get information and you know that, maybe not 2018, but 17 or 16, it was marked a final return. Okay, what happened to that entity, right? You're going to see what happens with the operations as you walk through the return itself, but it'll give you an idea of what is going on with the history of that entity. Box I, that'll give you the number of shareholders. So you'll be able to see how many shareholders or owners in this corporation just by number alone. Sometimes, a lot of times, when you get the 1120S in production, in discovery, you may not get the K1s attached to it. Or if you get the personal income tax return, you'll see the Schedule E. But again, you're not going to get the K1s. But if you do get this tax return and not the K1s, you certainly know if there's more than one or multiple shareholders, you know that the K1 is going to give you some information and an indication of how many people actually own this entity. So moving on. Again, counting method, Schedule B, this is your cash accrual or other. It could be a hybrid or other basis of accounting. Business activity or product or service, again, gives you an history or information about the company itself. A little bit more detail than just the numerical number that's shown on the Schedule C to the extent that it's filled out. This area here of the tax return, whether the entity owned directly 20% or more, directly or indirectly, or 50% or more of the total stock issued and outstanding of any foreign or domestic corporation. And B, whether the entity owns directly an interest of 20% or more or an interest of 50% or more in profit loss or capital of any foreign or domestic partnership. What this and why we highlighted this is that this gives you an indication if there's any other entities out there. And again, it would be filled out accordingly. So something to look for as you're going through this form, if there's any information or any boxes checked there. 5A and B, this section here talks about restricted stock, stock options, warrants, or other instruments. It gives you information on the equity compensation of the company. So if there's anything here, you certainly want to ask for details about this equity compensation, who received, and any agreements associated with that with the equity compensation itself. 8, again, I went through that, the C Corp, and if there was an election made that year, again, giving you information if there's some issue with taxes that you need to look into or your forensic needs to look into, if that box is filled out. Moving on to page 17 of the PDF, at the top, did the corporation make any payments in 18 that were required to file Form 1099s? If this is checked as a yes, you certainly know that the entity issued the Form 1099s. It's going to give you at least the fact that it did, and that whether you should ask for information on non-employee compensation, because that's what the Form 1099 is. Sometimes when you're going through the engagement, you're going to find, or potential allegations, that there's other employees, family members that have worked for the company in some capacity, or other people that are questionable employees, et cetera. So, or not employees, but contractors for the company, I should clarify. And those people would be issued a Form 1099. So again, an indication if such exists, then certainly I would ask for it if it seems to be an issue area. Schedule K here gives you a summary of the allocation in total between all of the shareholders, the income, the losses, and the credits that are allocated to the shareholders as a whole. So that's what K1 is showing you 100% of. If you move to the next page, Schedule K towards box 16, it's highlighted here, 16D and E, again, trying to just highlight for you certain areas of inquiry and good areas that'll give you a better indication of what to ask for, or even understand a little bit more in terms of income and cash flow. Distributions, this box would be filled out, and repayment of loans from shareholders. Distributions, I think Judy had touched on briefly, but shareholders of an S Corp, we receive cash flow either in, if they're owners, they can receive compensation, which I'll show you on the income statement when we get there, but also they can receive payments in the form of distributions. So in total, in Schedule K here, you're going to see what the total distributions were that the entity made for that particular year. 16E, repayment of loans from shareholders. This is an indication possibly of additional cash flow to a particular titled spouse, if there was a repayment of a shareholder loan. If this box has information in it, I would certainly try to seek, and you would probably see it on the K1 if you have the K1, to see what portion of that loan related to that particular shareholder and who it related to. So again, an area that you want to ask about. Balance sheet, and you'll have the beginning of the tax year and the end of the tax year, the first two columns being the beginning and the end being the end, the last two columns. Again, highlighted, this is typical of a balance sheet, the components of a balance sheet. You have your assets and your liabilities and shareholders' equity section. But of note here, again, is this line item loan to shareholders, and then line 19, loans from shareholders. This, again, like I mentioned, is cash flow. Did the entity pay out monies to a shareholder, so it's recording a receivable, an asset? Or is the company due money from a shareholder, so it's recorded as a liability? Or does it owe money to the shareholder, it's recorded as a liability? And is it due money from the shareholder, recorded as a receivable? Additional paid in capital, This line item here is really additional cash advances to the corporation that's not contained in the initial capital contribution to the S corporation. If there is money in here, or if there is a dollar value in here, again, another question area, you know, was or did the shareholder, the titled spouse, contribute additional cash to the business in this particular year? Or what is the makeup of that additional paid-in capital? All right, M1, this section here, you have net income per books, and then you have income or loss down here on line 8. And what this is doing is it's truing up certain tax deductions that are made for tax reporting purposes that may not be fully deductible for tax, but are obviously paid out. For example, travel and entertainment. There's a threshold, a limitation in terms of the amount that could be deducted on an S corporation. But for book purposes, the amount of, you know, $50,000 a year is actually paid when you look at the general ledger. However, for tax purposes, maybe only 50% is being deducted on the actual tax return itself. The forensic accountants, you are going to see that in all of our analyses, and we call them spreads or financial analyses we do for the businesses, we come down to net income per books. We don't use the tax income number, we convert it to book income. The M2, this section here, as I scroll down, this is really just for tax reporting purposes, the analysis of accumulated adjustments accounts. It's tracking, it's a tax schedule. It's not the same as a capital account schedule, but S corporations have this account that they have to track separately for tax basis information and for taxability information, more so the ones that have been converted from a C corporation to an S corporation. Just so you guys are aware that that even exists. All right, so we're on the K1 for the S Corp. Again, this is the form that will individually show per shareholder their portion, a breakdown of their portion of the income, loss, credits, and distributions. And where did it go? Okay. Bear with me. All right. Can't scroll because I have this little screen here. Okay. So on the K1, final or amended at the top. If it's a final K1, it's exactly what that is, a final K1. So you could see if you're getting K1s for all of these years, and then this particular one is marked as final, then you know that the entity, that shareholder is no longer getting a K1 in the next year. It gives you an indication of the status, whether it was an amended K1 as well. If you see, click this as amended, you certainly want to just see what the first one looked like as well, just so you could see what was originally reported. Gives you information about the corporation. The shareholder piece of it will give you the information on all of the shareholders, the name, the address, etc. The percentage of stock ownership in box F. And then the other important thing to note here is box 16. So what box 16 is each one relates to a particular lettering. And these are the instructions for the K1 that we attach behind it, which you can refer to after. But box 16D will show you distributions. So this is the distributions that the shareholder received from the S Corp. And box E is going to show you repayment of loans. So you're going to see the figure in there in terms of any repayment of shareholder loans. Now, when we get into the partnership, which I'm going to get into very quickly, what you'll notice here in an S Corp is that this section is blank. And in the 1065 that we'll show you, there's actually a capital account activity shown for the member or the partner. But for S corporations, this section is blank. They're not required on a K1 to show you the capital activity for the particular shareholder on this form. So a lot of times you'll see forensic accountants ask for the capital account analysis from the actual accountant because they're maintaining it in the books and records, but they don't have to report it for tax purposes on this form. So do you want to do the polling question, Matt, for S Corps?
Yes, so we will do that one. So true or false? S corporations have two layers of tax, one paid at the corporate level and another paid at the shareholder level.
Can people see this, Matt?
We are getting some votes in here, so you should be seeing it, but if you do not, you can also respond through the message board as well.
I don't see it.
So I don't think we can see it as the organizers, but we're at about 40% voted right now.
Polls, 2 of 4. I'm looking at my little cheat sheet here.
So let's get ready to close this up in the interest of time. We're at about 55% of people, but we
Okay,
are
that's
at a
fine.
minute here.
So the answer is false. It doesn't have two layers. It has one layer of tax paid at the individual level. So for those of you who responded as false, that's terrific. I see we got 90% if I'm reading this right from my
Correct.
screen. All right, partnership. Go
I'm just
ahead.
also going to say the code word for today is crisis. So please include that in your CP or CLE form, evaluation form when you send that back out. So again, it's crisis.
Okay. All right, so 1065, a lot of what you're going to see on this form is very similar. This form, again, flows through the individual tax return. 1065s, the entities that file this form are partnerships or limited liability companies, not single member. Again, single member LLCs are Schedule C, but ones that have multiple members are going to file a Form 1065. For those entities and for this form, like an S corporation, there is one level of tax because it's a flow-through entity. So it's going to flow through on the personal 1040. The partners or members will receive Schedule K1s attached, just like an S corporation, which is going to show the pro rata share of the income, the losses, credits, distributions. And as I'll go through with this, there's other nuances with respect to the K1 that's being reported, but that K1 will give you an indication of cash flow to that particular partner or member. Partnerships, just by way of background, there's two different types of partnerships, limited partnerships and general partnerships. General partnerships, unlimited liability, and your limited partnerships, at least one of the members have to be a general partner for unlimited liability purposes. And then, of course, the LLC is a single member, like I said, files under Form Schedule C, but multiple is going to file under here. Going down again, the top of this form is similar to the S corporation, gives you information on the company, what's going on, the activity, the product, date business started, and then the tax period that we're dealing with, the time period. Sometimes you'll see, July 1st of 2018 to December. So you know that this entity just began. It would probably be clicked as initial return as of July 1 of 2018. A lot of these are the same, so I'm not going to spend much time on that. One unique thing on the 1065 that's not on the 1120S and unique to entities that file this form, and these entities, they don't pay owners compensation in the form of wages to the owners. Instead, the way that partners or members are paid are either in owner draws, which will show up on the K1 and on Schedule K on this form, but they also can receive guaranteed payments for the services that they're rendered. So if you do see a line item here, this will relate to the payments to the partners, something to be aware of, and the pro rata, the amount related to one particular partner, is going to show up as a line item on the K1. So just something unique to this form. I went through the types of entities that would file the return at the top. So it'll give you, even if it files a 1065, once this is checked, you'll know exactly what kind of entity you're dealing with. Similar to the S Corp, it'll tell you this Section 3 will tell you if there's any other ownership interests in any other entities. So are there any other assets that you need to carve in to the discussion that you're having with your client, or subject to equitable distribution purposes? We circled 8 here because it signals to you whether or not they have any ownership, the entity has any ownership in any or any assets overseas, foreign bank accounts overseas, and they would be required to file an FBAR. Again, a flag, if you see it, something more to ask for in terms of discovery. So you're making sure that you've identified all of the assets that potentially subject to equitable distribution. Page 24, the PDF, Form 1099s, similar, gives you information on non-employee compensation. And then this is in terms of whether or not any of the owners have any interest in foreign corporations. Designation of partner representative. It used to be, prior to 2018, a tax matters partner designation. And all that means is this is the person of the entity that's been selected by the company to talk to the IRS if, in fact, the IRS has questions or comes back for an audit. But something, again, a line item I want you to be aware of. K, pro rata share, total entities, allocation of income, losses. Here you'll see guaranteed payments here in total, which should match the income statement and the guaranteed payment line item there. Distributions of cash and marketable securities or distributions of other property, again, a signal of additional cash that was distributed, cash or non-cash property distributed to the partners. Balance sheet, same thing. There's different nuances and different titling, but capital in this case, the equity of on a 1065 is shown as capital, not equity. Or stockholders' equity, but the same nuances apply with the additional cash flow from the partners. I'm going to just flip to the K1 here. Again, same information that it gives you. Guaranteed payments are highlighted there. So in addition to distributions, which would be shown in box 19, you want to see if there's any guaranteed payments paid to that particular partner or member. K1s on 1065s are different, obviously, than the S Corps. The section here, L below, is going to show you the capital account activity. So in the event the business, ended at that point in time in that particular year, it gives you a good indication of what that ownership looked like and what would be paid upon liquidation. So this capital, and it also gives you an indication of how much, if any, monies were contributed by the partner or member that year and what the total distributions or withdrawals were. It's broken up in these sections here between the allocation of capital and profit and loss and the liabilities, basically for tax basis purposes. That's exactly why it's split up. And sometimes you'll see that these percentages don't equal, and they may not equal. And what you have to look towards is the actual agreement, the partnership agreement, dictating the allocation of the percentages here, the profit and loss and the capital percentage. I think that's it for, this was the other item I wanted to show on the K1 here, the QBI deduction. So we plugged something here so we could show you what this looked like. I don't even think that this was part of, this wasn't part of our blanket template, but we added it in here. So attached to the K1, you would have additional calculations here. And the QBI, if you do see this section 1090 or 199A, this is going to signal to you that a calculation was done to see if they qualify for the 20% deduction. And a lot goes into it, but again, I just wanted to show you what it looks like on the K1 if you do get it, and the calculation was performed. It'll assist the taxpayer in determining what that deduction is. So just for knowledge purposes only, that form exists. All right, Judy, we got a couple of minutes on corps.
Okay. Do we want to do a polling question or you want to just move right in?
Yeah, I think I had a fun polling question for this one. So
We
yeah, why
do
don't you do a
have,
polling? We'll give a minute and then go through corporations in 2 minutes.
Okay.
So apart from owner drawers, what other type of payments can a partner receive for their services? Distribution payments, guaranteed payments, don't care because it's towards the end of the presentation. So.
All right, we'll stop. So we have majority, which is fine. You guys are right. 67% is guaranteed payments. So terrific. Everybody's still paying attention. I don't think we lost anybody either. So that's good. All right, I'm going to change presenter, Judy, so then you could take over for the
Okay.
last minute.
Okay, so 2 minutes we'll get through. Can everybody see my screen? Hopefully it's Form 1120. So this is the tax return form that all C corporations will have to file. So it does not include obviously any S corps, partnerships that Nicole just spoke about. I'm not going to be able to hit on every item that we have highlighted here, but I do think that the most important thing is C corporations, unlike those other pass-throughs, pay tax at the corporate level. So with the new Tax Cut and Jobs Act, there was a big change to the corporate tax rate. It was reduced from 35% to 21%, which is a really significant reduction. So if we go through the highlighted areas at the top, very similar to the S corporation tax return, I do want to point out this date incorporated. Oftentimes in cases, I find that's important to know when the entity was formed. So that's just something to draw your attention to. Again, these sections very similar to the S corporation. So let's see, if we move down, and I think the biggest difference, and it's not highlighted, is going to be on line number 12, compensation of officers. So C corporations pay wages to their officers. And a lot of times, in order to reduce that corporate tax liability, they bonus out a payment at the end of the year to the owners to reduce that liability. So I think that's one of the main variances between the S corp returns and the C corp returns that I really want to point out. And
something we scrutinize too when we're doing valuation work, obviously something in terms of reasonable compensation, et cetera, understanding that there's they're bonusing out the profits in the form of compensation, but then to look another layer to say is it reasonable if in fact we're engaged for valuation purposes.
Right. And then one other thing I'll just point out, I know we're out of time, but line 29A, this net operating loss deduction. So a lot of times you'll hear that's commonly referred to as the NOL deduction. Prior to the new tax law being in place, that could be carried back 2 years and forward 20 years. With the new tax law in place, you can't carry it back, but you can carry it forward indefinitely. So there are some limitations. It's 80% of taxable income, but that's something that I did want to highlight.
I think that's it, because I think a lot of the form.
Yeah, everything else is all of this is a little bit similar. Again, the basis of accounting, the relationship with any other entities, and then towards the end, again, the balance sheet, and we're highlighting these certain areas to look for. So I think the main issue with this form is related to the corporate versus individual tax rates. I think that's your biggest takeaway.
And then also the double taxation.
Right.
Because you're taxed twice at the corporation is taxed twice, one at the corporate level and then again at the individual level to the extent that they pay dividends. So you want to wrap it?
Yeah, I think we're out of time. So I think maybe we should do our last polling question. If anybody has any questions they'd like us to address, we're happy to stay on and do so if you'd like.
So our last polling question is, what is the new federal corporate income tax rate as a result of the Tax Cut and Jobs Act? 23%, 40%, 21%, 37%. We're at about half of our people so far.
You're good. Why don't you say the answer?
So the answer is 21%, which is what the majority here had selected.
Terrific. Judy, you want to close? Matt, you have housekeeping? We want to
Yeah.
thank everybody for being attentive. I could
Thanks,
see
guys.
only one person drop, which was great. This is new for us. I've never been on a visual webinar, so normally my voice is just heard, not my face as well. So you could probably see the Montana jersey in the back. That's my husband's. But we appreciate you taking the time. We appreciate the opportunity to speak to all of you. Thank you, Alyssa, for giving us this opportunity. We hope that everybody stays safe and healthy and sane while still working from home. Judy, anything else?
I think that's it. Yeah, thank you, everybody. Hope you learned something today.
I'll just add that just as a reminder, to get CLE credit, you will need to send the completed evaluation form with the code word to me at mbasillo@withum.com. I will be emailing everybody at the conclusion of this presentation with some of the attachments in case you were not able to download them. So you will get my email through that. And thank you very much to Nicole and Judy for sharing your expertise. And thank you again.
All right. Thanks, everybody.
Bye. Thanks, everybody.